Hello and welcome to a brand new show of Market Makers Diwali Special. My guest on the show today is Mr. Maverick himself, someone who needs no introduction whatsoever. Shankar Sharma of Cheif Global. Shankar, thank you for joining us and here's wishing you a very happy Diwali.
Thanks and same to you, Nikunj, and to everybody at ET Now.
Looks like we are in for not only a good Diwali but the extended period after Diwali as well.
Yeah, markets have been good globally. If you see emerging markets, you look at Brazil, etc., they've been doing very well. General commodities have been good as well. Crude has been very strong. So overall, the tide has shifted in favor of emerging markets after nearly 5 years of a lot of negativity over EMs. And that I think the bottom got made in February this year. So since then, EMs have done quite well in dollar terms. I think they're up, 30-35%, something like that. So I don't think that is going to slacken off in a hurry. So overall, EMs doing well is good for India.
Do you think the long emerging market trade could last for another quarter or so?
Could be even longer because it is coming out of a long bear market. So when things come out of long bear markets of the kind that EMs endured from 2010 onwards till 2016, then I think the rally that happens, will last a while. I don't think it just peters out in a couple of quarters. So it could be even longer than a quarter.
If I look at the positioning of India, both in terms of macro and micro, we are right up there. But if I look at the performance, this year it's Brazil and Russia. So do you think India will catch up or others will fall down?
I don't think Indian large caps will catch up. So you have to segment India into two different markets altogether, and both belong to completely different classes of equity. So I think it's time that we recognize that India is no longer just a single market. Large caps, in my view, in India are more or less fatigued. I don't see where in large caps, barring the handful, on the autos, etc., where in large caps we are going to get great alpha. You look at IT, you look at Pharma, you look at even consumers. Everybody is struggling. So the only bright spark out there has been the few auto companies and two-wheeler companies. But that can't drive large caps in aggregate. But you come down the market cap spectrum, down to the micro caps, 1,000, 2,000, 5,000 crores. I mean, there you've been seeing amazing growth from 2009 and even in the last couple of years. So my view is large caps in India are going to disappoint, but the action has been in small caps, and I continue to believe that is the area where that segment of the market will do the best in the world, and it has been doing phenomenally well as well. So large caps, I'm not a believer.
And that seems to be a global phenomenon. If I look at the Russell index, if I compare the S&P versus Dow, the broader you go, the better are the gains.
That is true. That's not true for the commodity-driven markets, but yes, that's true for markets where there is a large sort of population of small cap companies. US is very similar to India in that it has a large population of small cap companies and it has a large overall listed company base. So yes, I think what has happened is in this entire turmoil around 2008 and onwards, the large companies have not been able to figure out how they come out of these problems. Smaller companies have been able to figure some element of the game out. And that's why you are seeing money coming into small caps, and I continue to believe they are a great opportunity.
The challenge historically with the small and mid-cap companies has been that they start off well, but the minute they scale up, they struggle to scale up. That's been the case with IT, that's been the case with pharma, engineering companies. So far for next year, this year, next year, you can talk about a rosy picture for mid-caps, but when they start reaching a minimum hurdle rate, a minimum size, they tend to flatten out.
And that's true for everybody. I mean, that's true for your net worth, that's true for mankind. Everything will reach a point when it becomes age, and you're not that nimble anymore. I mean, that's true for companies, that's true for small caps and large caps or whatever it is. So I think it's a while before they reach there. I don't think they'll suddenly become large companies in 1 year's time, at least not in India. In India, remember, our companies are not tech companies. India has actually zero tech. Ours are still old economy or kind of old economy, and I don't think e-commerce is new economy because it's still ultimately a very old business. These companies take time to go from 0 to 100, unlike a pure tech play or a social media platform, which can go from anything to anything in a matter of a few quarters. We don't have those kind of plays. So to that extent, the fall is also a little slower. the age itself also doesn't catch up immediately. I mean, you can see age having caught up with a number of the big tech listings in the US already. By the time they list, actually, they have already been fully priced. India, I think, is still a long way away from reaching that position.
So I'll talk about specific for mid and small cap stocks, but you've always maintained that, look, don't look India in isolation. India will do what the world will do. It will map up or down 2 or 3% here or there. One is getting a sense that next 12 months a lot would be thrown at us, whether from Fed or whether from political leaders, even from even from a matter of what will be the map of Europe. These are large ponderable questions which we would be discussing and debating in next 12 months.
I think the world has many questions, and I don't think we have many answers. And for the last 7-8 years since the crisis came, nobody seems to have any answers as to how things are going to come back to normal, if at all they'll come back to normal, or what is the new normal, how people can exit from the policies that they have, the central banks that have followed in the last 7-8 years. Nobody has any answers. So I think we should stop thinking that central banks know something that we don't. I think that part of the equation is quite clear, that nobody really knows. So yeah, I mean, you're right, there will be many questions, and I think markets will react when they come up. But my sense is, in emerging markets, those questions will be a lot less than in the developed markets. Because the emerging, what questions are you going to ask of emerging market policies? In any case, in emerging markets, we've now not followed the kind of hugely loose policies that the West has followed, or the developed markets have followed. So really, most of the questions are centered towards the West rather than EMs. So I think that's what the market is distinguishing now, that for a change, EMs have less questions than, let's say, Europe has, or let's say Japan has.
Now, we've debated and argued in the past on this forum that central bankers are running out of option. We know that the effective rate cut is not making the markets happy. In fact, markets now don't even react to some of the rate cut announcements or quantitative easing announcement. So what could be that trigger which could take asset prices higher?
I think the only trigger is very simply the fact that there are no options for investors worldwide to go and put their money and hope to get even a measly return. So with interest rates being near zero, it's a pure straightforward thing that money will move out of fixed income and into equities. And that has been the reason why you've seen equities do well despite not much having changed fundamentally for equities. So I think it's simply a zero interest rate option that you have, versus that equity might give you 4-5%, a little bit more than that. I think people are being compelled to take excess risk.
So Shankar, let's talk about India. And IT is where the debate is, IT is where the disruption is. These companies who always claim that, look, we've got a secret potion which is the fountain of youth, are now admitting that they will also slow down. Growth from late teens has come down to single digit. And now they're openly talking about more pain is about to come.
I don't think the pain has come yet. Look, these are very large companies. If they are slowing down from mid-teens to single digit, I don't think that's doomsday. The real doomsday, and I hope it doesn't happen, because remember, IT has been very central to the new India, the new consumption, the pool of talent it sucked up, and made a lot of wealth for them, gave them good lifestyles. It drove the consumption boom, eating out, cafes, cars, everything. So it is not just about a single industry. I think IT reshaped the modern India 20 years back. So I, as an Indian, don't feel too happy about this. But I, as a human being, understand that people age, people slow down. And I think they are hitting that kind of point. The fear I have is that I don't think unless they figure out a way out of this, I don't think this low single digit or the mid single digit is the final point of stopping.
You actually expect the IT companies to contract their top line?
I'm
maybe
not saying
negative.
I expect it, I'm saying that would be a real doomsday situation. And I hope our managements are smart enough to figure their way out. I do believe we have very good managements in these IT companies. I mean, so for one, I'm not making a case that they are poor managements. I think by and large, our mainline IT companies have great managements. But you are being faced with a hugely disruptive tech landscape. And, they are very large companies. For them to outthink their way out of this will be a severe challenge for sure.
Will your mid-cap argument exist in IT, or for mid-cap IT, it's a dangerous terrain?
That doesn't extend to mid-cap IT. Okay, unless somebody has a particular product, a particular niche. When things turn bad for the large guys, I think it'll turn slowish for the small guys as well. So I don't think, I think as a pack there is a problem.
And I can extend that with mid-cap pharma as well, because if the large guys are feeling the heat of US FDA, regulation and pricing challenge would hit mid-cap pharma more.
Look, I mean, my view is in Indian pharma, has a lot to blame itself for. I mean, that is a fact. Unlike IT, which, things can get disrupted. I mean, who knows, Facebook may not exist tomorrow. I mean, something else will come up. So you can't keep outthinking every new disruption. That's not possible. Nobody has ever managed that, right? So I don't blame the IT guys for not having seen cloud and all that. It's not a bad situation. I mean, as bad a situation as the pharma finds itself, and in terms of management quality. Here, people have played fast and loose with the FDA. I mean, this is not the way to run a quality operation, supplying to customers in the most lucrative market in the world. And then you have the kind of practices that we all we know of. So I think they brought it on themselves.
So the pain is here to stay.
I don't think it's here to stay, because they are still significant companies. I don't think US FDA will do anything very drastic. I think it's more rap on the knuckles and some fines and penalties, and I think life will go back. But I think the reputation has been dented, and that is the real problem. And when somebody is going to put medicine in the mouth and you have some doubts about the veracity and the legitimacy of that, that is a severe reputational damage.
We've seen a big uptick even in mid-cap financials and largely NBFCs. Bajaj Finance now has a market capitalization of 50-60,000 crore, which I've been told is a market cap which is the highest market cap in the PSU banking space, man, as SBI. I mean, that's the size of an NBFC now. Is that the hunting ground for you, mid-cap NBFCs, mid-cap financials?
No.
No, not really.
So I'm sitting out that boom. And I'm not a big believer in credit-led businesses.
Even though if it is consumer-led?
My belief is, and by the way, I mean, that brings me to the other aspect. In a otherwise pretty gloomy scenario for consumption, I don't see how lending can keep increasing to consumers at this pace. So I'm sure a lot of irresponsible lending is happening. But the thing is with NBFCs or finance in general, credit-led finance in general, is that profits are front-ended. The losses are back-ended. So all the so-called PAP that many of the players would be doing will not show up for the next couple of years. They might show up 2-3 years from now.
It's like saying buying PSU banks in the 2003-2008 credit cycle.
Exactly. So now you're paying for that, correct? At that time they were all rocking, right? So since the profits are front-ended, the next couple of years look very, very good for this industry. And I think you want to play that momentum, by all means do it.
So if mid-cap pharma is out of the equation, you don't like banks, you've never liked banks in the past, mid-cap IT is out of the equation, so then what do you like within mid-cap?
There are a lot of companies. I mean, infra is very good, chemicals is good. There are odd companies which don't fall into any sectors, and mid-caps and small caps, there are plenty of companies out there, to be honest with you, and they're frankly, I mean, the bigger problem in investing in many of them is simply that there's no liquidity to invest in them. So I find many good companies who are trading 2,000 shares a day, and it's impossible to get into those companies. But there are quite a lot of them out there, trust me.
But if there's one large cap stock which you think is still looking reasonable, maybe markets are missing on the earnings recovery, or maybe markets are not realizing the value of the franchise, which is that large cap?
No, I mean, for instance, I liked Zee Telefilms, and that's done very, very well because for a long time it was kind of underappreciated, but I think what Subhash Chandra has done, in a lot of senses, it's almost like the Indigo equivalent in the media space where people have been struggling, but in particularly the electronic media part, right? We all know it's been a big, big challenge, but they have managed to reinvent themselves, and it's a pretty global company now. So I think, and the stock is now beginning to reflect that. So I like that now. That doesn't fit into any broad, because media itself is a very small sector in India, and particularly in the listed space. So those kind of oddball plays in large caps we have found, but I can't find anything which is so deeply undervalued and the market is missing a big recovery.
You mean Tata Motors at 500?
I think it's good.
We've discussed United Spirits in the past, and against expectations, despite the Diageo takeover, the stock is available at a price where it is lower than the Diageo open offer. Yeah. We've discussed this one in the past. Is there money to be made in liquor stocks, especially United Spirits?
That I don't know, because I mean, my real fear is this whole liquor ban thing. And many people say it doesn't matter, or it'll it won't happen and all that, but I'm not so sure of that. And there will be, around 2018-19, many states will go to elections, because they get bunched around the Lok Sabha time. So you never know how many more states jump onto this bandwagon, and whether it translates into real sales hit, we don't know, but the sentiment gets hit, and I think that's one of the reasons why the stock isn't doing well.
If I talk of the big picture for metals, the big picture is the following. China is slowing down. There's surplus capacity in the world in every major commodity, and demand is going to be low. But despite this common consensus view, metal stocks and metal prices, they both have done very well from the recent low.
Yeah, that's the way markets are. Everybody had a view. Everybody was right on that view for a couple of years. One fine day that view doesn't work, so it stopped working. I don't think metals are bad now. I've been bullish on it all year.
February we had interaction. You said buy metals.
Exactly. So stocks have done well, and I think it was excessive pessimism. I think with some degree of recovery in emerging markets, the sentiment for metal commodities is generally more positive than it has been in the last 5 years. It may well be only a technical, move. I don't think there's a big resurgence in the demand, but I think at the margin things are not that bad. And when you're beaten down 80% in commodities, then all you need is just a lessening of pessimism, a lessening of the bad. You don't need actually real good news. It's just lessening of the gloom, which is enough for you to make 100%.
So awful has become bad, but awful has not become great.
You don't need that to become great to make serious money.
So what is awful and where awful could become bad?
In my view, what is not awful yet but could become awful are some of our large caps.
Okay.
Who are clearly fatigued. And I think there's a whole churn that is going to happen over the next 4 or 5 years when many will move out and many new sectors and new companies will come in. And that transition is always painful.
I was looking at the Sensex data. It's been 30 years for the Sensex, and you're an old timer. You track Sensex more than the Nifty. Only 6 companies in the Sensex have survived.
Yeah.
So if you have to, let's say, talk about what the Sensex could be or the Nifty could be in 2020 or 21, how do you think the pictures would change? Because that's a more pertinent question. That's a more trend forecasting question you would like to answer.
I'm still thinking about it. I don't have an answer yet. But yeah, obviously we are at a point where 2 major sectors are getting fatigued, and even consumer, the space is not looking too hot right now. So we'll see. We'll work on this theme.
So you feel that we are in for good days, but this is not like a blowout bull market which we could be staring at?
I don't think it's a blowout bull market by any standards for large caps. I think there is a very strong bull market for small and mid cap companies. But I think there's a big overall bull market for emerging markets.
Do you see serious money also flowing back to emerging markets in the wake of a Fed rate hike or in the wake of what's going on with other economies?
It's already flowing.
It's not large. It started.
But that's the point. That it doesn't have to become large from day one. People are still nervous. People are still tentative. Nothing will start as a deluge. It will start as a small trickle. But at least the trickle has come after 4 or 5 years, or at least 2 years of really abysmal flows in EM. So the tide has started to turn. It will take a while to gather momentum. And I've talked to many people who are still skeptical about Brazil, who are still skeptical about Russia, skeptical about oil. So that is good, because that is what is going to keep this market afloat. So I think it will be a while before big money comes, but I can see the trend coming back to EMs in money flows as well.
But India is more like a crowded trade, both from an MSCI benchmarking purposes, which is an absolute, and if I look at the relative also, again we've got solid inflows, and most of the global funds either are overweight India or extremely overweight India.
Which is fine, which is a sensible strategy. The problem with them is that they have been underweight the markets that have done very, very well. I mean, the oil-centric markets. And I know many people who were like Brazil, I think, has a 5% weight in the MSCI, and most people were like 1% or 0.5%, 1.5%, and the market is up nearly, it's almost doubled now in dollar terms. So when you miss out 100% in 5-6 months' time, I mean, that is painful. And there's a 5% index weight, that's not small. So by being underweight by 4% and the market has doubled, you've given up virtually 7-8% in performance. I mean, that kind of hit people are still recovering from.
10 days and then we know who will occupy the White House for next 4 years, who will be the boss of Oval Office. Markets are pricing in a democratic sweep. That's the market opinion. A reversal, is that bad news? Or any change in the opinion, is that bad news?
I don't think markets will react much to this. I mean, I think there might be some temporary, flutter here or there. But I don't think we should be too concerned about who comes into the Oval Office. As you say, I mean, it looks like the Democrats coming into it. But I mean, I'm no expert on U.S. politics, and my view is that I mean, it's mirrored the politics in India quite accurately. So in one sense, I feel proud that they are mirroring what we did 2 years back. That there has been a sort of a left-leaning candidate and a very right-leaning candidate, and we have had exactly the same situation in India. If you look at Twitter, if you look at all the kinds of messaging, it's been very similar to what we saw 2 years back. So India has led America in at least one respect, and that is the whole political landscape. If you look at the debates, they are very, very similar to what we have seen here.
So if markets fall because of the election outcome, whatever may be the outcome, but if they fall like they fell on the Brexit day, that would be a buying moment for you?
I would think so. I mean, I don't think US, presidential outcomes will determine EMs. I don't think we should make that kind of extension.
So what is the risk in the system?
I mean, frankly, the risk is that nobody knows. Okay, we are all hoping that whatever has been done, just continue it. We don't want to analyze it. We don't want to hear that you want to exit from this. You want to unwind this easy money. And we don't want to hear all this, boss. I mean, it's worked, somewhat worked. Let's just continue with it. But I don't think anybody has any clue.
But are markets taking implementation of GST, earnings recovery for granted? Because the downgrade cycle, earnings upgrade cycle has not started. We are still in a downgrade cycle. The quantum of downgrade may have got reduced. But let's be clear, prices have moved up and earnings are yet to catch up.
I don't think earnings cycle is recovering at all, because earnings are dominated by large caps, and I don't think large caps earnings are looking good at all. It's very, very simple, boss. I don't know what people have been, and last 3 years, everybody starts the year with 17%.
It comes down again.
And it comes down to between 0 and 5%. And all these analysts and strategists should be fired.
You've been a strategist, come on.
Yeah, but I don't have forecasts which are 17, 18%. I mean, that's rubbish. Look at the data. If you're wrong for 3 years, then you have no business occupying that seat. So the fact of the matter is, earnings picture I think is looking quite poor, because large caps are looking bad. I don't see earnings recovery happening at all. The only thing India has going in favor as far as the large caps are concerned are bond yields. They have crashed, as we have discussed it in the last couple of years. That I think is the single biggest sort of change that I could see. At times were 8%, now you're sub 7%. That itself is providing some level of floor to the market.
Will that make PSU banks a tactical buy?
I'm not going to go out and buy banks. Let's be very clear about it. Many people have called the bottom. The stocks have had technical rallies, but I'm not a believer yet in these.
So when you talk about mid and small cap stocks, you have to be stock specific. Shankar Sharma has never been stock specific. He's always been a top-down guy. So what is the top-down Shankar Sharma doing?
I'm not doing top-down. I don't see anything very compelling in top-down. As I said, I made some money in Brazil and all these commodity kind of companies. Those were the sort of big macro trades. But they have played out. They have done very well. I don't think there's more money, at least from a I don't see Brazil going up another 50%.
Now it's Diwali time, so the essence of the show is slightly different. And on Diwali time, the common rhetoric on WhatsApp this year is Diwali tip, Murat stocks, Murat ideas. Shankar Sharma is speaking to our viewers on the Diwali day. He rarely speaks, but when he speaks, he is expected to say something which is money making. So what would be that money making idea for our viewers?
For Diwali, why do you need money? You already made the money. Now go and spend it. Buy some mithai and all that. We'll talk next Diwali.
So fueling up the consumption view.
Yeah, well, we'll do whatever we can do, right?
Every investor or every trader has a niche. Like Buffett is known for buying consumer monopolies. Soros is known for the man who broke the Bank of England. What do you think is that unique way in which Shankar Sharma approaches the market?
I have nothing unique. As I said, that I'm not going to die one day and expect people to remember me after the day I'm died. So I have no visions of grandeur. My point is, as long as you're around, you have to figure out something different. So I do top down, I do bottom up. My view is, if you want to be a batsman in cricket, you have to be able to play all the strokes. You can't say that I can play only the off drive and not the square cut. So I like to play all the shots. That's
a fair point. So, but if you have to hit a century, you have to plan the game in advance.
Correct.
So how are you planning the next 1 year of financial savings or investing?
As I've said many times, bulk of my money is in fixed income. The risk capital part is in equities, which is itself quite substantial. But the fact is that I'm seeing a lot of opportunities even now in the smaller companies. Lots and lots of them.
Buffett says that there are two things which get better with age: serious investing and wine. So I won't talk about your wine etiquettes, but let's talk about the way you've changed as an investor. In last 10 years, how has Shankar Sharma changed?
You have to change. One thing that has definitely changed is that after the 2009 crisis, 2008 crisis, what I could not foresee was how low rates could go, because we had never seen that era. Okay, so when the cuts happened, and I never thought we'd see zero, and which actually made me sit out some part of the rally that happened subsequently, because I never thought that we would ever see a world wherein it, forget zero, going to negative. So I look back and I say that maybe that should have been the call to have, look, there is no way out of this except lower and lower and lower interest rates, because this problem is not going away. It's a structural problem. Maybe one should have been bold enough to have seen that and played equities accordingly with far greater aggression than what I did.
With closing comments, and we tend to talk about numbers. You and me have both enjoyed watching Wall Street 1 and Wall Street 2. The famous line of Gordon Gekko in Wall Street 1 was that every man has a number. Every man on Wall Street is chasing a number. So is there a number you're chasing in your life?
We all are.
What is your number?
I'll tell you when I get there.
I'm sure you'll get there soon, maybe if not this Diwali, next Diwali. Appreciate your time, and happy Diwali once again.
Happy Diwali to you.
Thank you very
Thanks
much.
Very much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.